What we're looking at, and if familiar, we've been watching this all day. Basically, the short premise is off the daily tanking on the S&P. There was one chance of the buy there earlier off the hourly, which we did. It didn't do much. Those who were just swinging today have stayed short off both those situations. Anyway, short term, let's blow it all up. We're looking at a 5-minute chart. You can see right here, that's that short all the way down, basically the whole grid. Look at that, 8/8. The long comes if all this holds, and if we were to go further over on the hourly, you can see the potential double bottom. It's a -3/8, so it is oversold. On the weekly that we looked at earlier, there's still all this room though, right? So be circumspect. We know that the Russell and the Nasdaq are very weak. I'm seeing 52-week highs, about 1 out of 50. It seems 52-week lows, and probably all-time lows in some of this stuff. These are names that are telling me that the people are throwing in the towels, they're getting blown out, etc., etc. Whatever reason, we don't really need to know. So that's what we're watching right there. Okay, that's your line. To get up, it's got all this resistance. Look at the power. Look at this fail. Right, so I'm going to go to hourly so you can see it better. See what we failed? That's your double bottom that we're talking about. It needs to hold. We negated this. We did a trade-off here. Remember? But look how it's perfectly. If this becomes a new channel, for those that are familiar with Babson and medium lines, it's all the way down here, which fits in with the others. So I know everyone's scared of missing out if it rallies. Well, the trend, this is a downward trading. Look at this. Bang, 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 bang.
Bang.
So lots of banging there. And not to bring out a Smith & Wesson joke, but it's kind of doing these bangs against it, right? Not
bang, bang, bang.
Right. And then this is what I'm talking about. This was our short, and it was hard to know whether it bounces or not. So I know I took profit too early and then tried, but then we got back on the short wagon. But look at this. That's what I'm talking about, the potential on that cloud, remember. And that was a twist. That's why it was a real good short. The good thing is when they're up here, if you're trading options, vol's cheap, puts are cheap. Down here, they're expensive. So if you've done it right, when you're selling your puts back out, you're actually making money on the vol, which I know Nick's very, very proficient at, as well as on direction, right? So any questions there, Nick? You're good?
Maybe you could explain to the viewers why, what we were just discussing in the sense of, there's a time for being concerned about sort of, selling vol and so on if the vol collapses and just being directionally, just hitting it and going in the direction that you need to go.
So I'm a big believer in you maximize your capital. You're going to have losers. You're going to have losers. You're going to have profits. So when the market is powerful like this, you want to be in control of that which you can adjust the fastest, which would be directional puts, directional calls, or futures, right? And what I mean by that is if you're just trying to sell vol, which is what I think you're talking about by doing a spread or something,
sure,
you've got two. All of a sudden you've got two vehicles. You got two spreads wide, and that's why vol widens. So you got to get hit on the bid and offer. In reality, you're going to be buying the offer on one and selling the bid. So straight up there, what it looks like on a computer or a model, you're not getting that. So there's that risk, and you're taking your mind off what you need. So on an impulse wave in Elliot terms, I'm just trading direction. And then if I'm trying to buy it off basis and I'm right, it's beautiful. If I'm wrong, I know I can get out quickly, right? And same thing in options. And so the other thing in options, you only want to be in things you can get in and out of. So some of these stocks that everyone talks about that these high flyers and with wide spreads, it's so much optionality to pay for, and that's for a reason. A market maker knows the downside. Now you're all seeing what the downside was. That's why it costs $10 or $20 to get into some of these things. So, I mean, I hope that explains it better.
Yeah, that's
What we're
helpful.
talking about. But so horses for courses right now, right? And everyone, I mean, you learn the ropes in this market. What I'm trying to do is show you more than anything the pitfalls, right? Everyone looks a hero in a bull market when the government prints billions of dollars and crap goes up and blah, 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 and brokers are spruiking them. It's become it's what we call a crowded trade. Everyone's a one way. It's a lot harder to all get out of, right? If you're all going, it's like, there's a reason they call it the sheeple. If you've ever seen sheep in a shearing shed or rounding up these animals, they all try to go through the gate at the same time, and that's what's happening. I mean, some of these stocks are shocking how low they are. We argued, the Sheik and I, for a while there, how the heck are these things so high, right? And we tried shorting a few of them, and lo and behold, we got run over, you know. And then eventually, though, the rubber's got to meet the road. In definitely in commodities, because they're real. In stocks, it's more they're all got to get out the gate at the same time. So right now we're at critical levels, psychological levels, 4,500 on the S&P. If we look at that one more time, you can see it's through that double bottom now, right? And this is a big level, minus 3/8. Minus 4/8 is 44.90 on cash. But 4,500, you know, is a psychological level, but it's a big, what Nick, we can talk about in a minute, gamma level right there. So there's a lot of support here. It gets through it, then these guys have to start covering. Because guess what? When they sold these puts, the market was up here. You know the vol's high. You don't even have to look at it. You know they're losing there. So they have to actually sell more to cover it here than what they did up there. If they're a smart, aggressive trader, they're already sold up here and they've sold down here to keep them in the position. That's an old trick we do a lot from the oil game, right? And that's how you end up. Protecting yourself, it keeps you in the position. The good guys are doing that. You can see, so they've got to protect that level. And that's what your double bottom is. And you'll know that works. And it's minus 3/8. But this is a 5-minute chart. So remember, the weight of one big order obliterates that. Even on the S&P, right?